Welcome to today's webinar brought to you by Apollo and Meld Gold. Just going to start with a short anecdote to set the scene of what sort of inspired today's webinar. But last year, just before Christmas, Henrik and I caught up with one of our largest investors in the fund, very well-respected family office. And the managing director said to us, look, speak to my colleagues, speak to other family offices, and we understand the concept of Bitcoin as digital gold, but we want to learn about the other crypto assets and present them in a relatable format. And it was only after the lunch that I thought, haven't we come a long way in 3 years? 3 years ago, when Henrik and I launched Apollo Capital, most people thought Bitcoin was magical internet money, and really that narrative of Bitcoin in particular as digital gold has really taken hold. So that naturally leads to the question, what's better, digital gold or real gold? And here we are today to talk about that very topic. We don't have long today. We thought we'd keep it short and sharp, so we'll skip the personal intros. If you are interested in Michael or Henrik's background, you can feel free to head to the respective websites. I've got a challenge for both Michael and Henrik. Tell us something new today. Michael, how can we think about gold in a different way? Henrik, how can we think about Bitcoin in a different way? To both of you, how can we think about both of them and digital gold and how it all puts together in a different way? Attendees, thank you very much for your time and your interest in the topic. Please feel free to ask questions. I'm going to throw to Michael in a few seconds, and he's going to introduce Meld Gold quickly and then talk about why gold is better than Bitcoin. Henrik will then have a turn for 8 minutes or so. Michael, a quick right reply, but we've allowed 10 minutes for questions. So very keen to hear and see them come through. Michael, take us away.
Thanks, Tim. Hey, Henrik, how are you? Sorry to have to reply. So I'll give you a quick intro into Meld Gold. Tim, be prepared to pull me up because I'm sure I'll try and push the 8-minute limit. So Meld Gold, for those that aren't aware, we've been working to digitize and streamline the entire gold supply chain. So mints, vaults, refineries, dealers, bring them all together and streamline that entire process. And by doing so, we've been building out a decentralized physical ecosystem, with the end result being issuance of gold, silver, and platinum on the Algorand network that is fully interchangeable between the physical and the digital version. With the ultimate idea that the bullion retailers and the gold retailers out there will become the local independent bank branches of the alternative currency space. And Meld is the technology that's allowing that to happen. Now, on the Bitcoin versus gold topic, look, I'm not anti-Bitcoin. It's probably a good place to start. But in reality, there is a difference, and there's something really good to discuss here. I'm going to be slightly harsher in some of my terminology here than intended. Henrik sent me flame emojis in a text this morning, and it set me right off. So, so look, in reality, BTC, if we want to be harsh, plagiarized gold's natural DNA in creating what it is on chain. And in reality, it's a really hard thing to actually copy the physical attributes of gold. Gold is understood and globally accepted across the entire world. A lot of people don't realize, but gold is the only currency currently accepted everywhere in the world at exact local currency, which is a really amazing feat. The reason this has come about is because gold has had a 2,000+ year history, and not just as a physical product, but it's been used for currency, it's been used for investment, it's been used for hedge, as well as its real world use cases. Now, this is not something that can be easily replicated in a completely digital form. What it also means for BTC, and especially in terms of a currency view, is the volatility of BTC makes it really hard for the everyday person to actually use it as a currency in their life. The reason for this is, if you had your paycheck in BTC, and by the end of the week it's halved in value and you can no longer cover your bills, that's a real issue. And even though that volatility represents an amazing opportunity for investment, which it definitely does. It does come hand in hand with the risk that's involved there, but it does mean it's really hard to use as an everyday currency. Even from the concept of, if you're pricing things in store in BTC, the idea of having to constantly adjust the pricing in such drastic movements, is a real fundamental issue. But again, there's a great investment opportunity that comes hand in hand with that. And it's not to say gold is not a great investment opportunity. I think it's different. Gold has had its price discovery phase over the last 2,000 years, which means even though gold has seen great returns, for example, the last 15 years have represented, an average of 10% returns per annum for gold for Australian investors, performing better than shares, the stock market, property and bonds. But it is a more stable, it is a more reliable, it is a more proven investment method over an extremely long period of time. BTC is really in its infant years. The other really big issue with BTC is the underlying technology. BTC and its development, though, it's what gives it its incredible features. And in saying this, credit where credit is due. Without Bitcoin, and its work in blockchain tech, we wouldn't have projects like Meld Gold existing today. So it's quite hard to sort of judge it too harshly. But by the same token, BTC is extremely limited by the fact it's hard to change. It isn't adapting and growing with technology as it goes. And now we're seeing things like transaction speeds, cost of transacting, getting to a point where it's meaning it's unviable to use in any day-to-day format. And this is why we're now seeing things like wrapped BTC come to market in huge ways. We're seeing Bitcoin being wrapped in other blockchain technology and issued on other chains. If that doesn't speak to the issues behind the technology itself, what else does? And on the other side of that, we've now got incredible technology coming to market. Projects like Algorand that Meld work with that have had the luxury of seeing what its predecessors have done, learning from its mistakes, being able to really consider the technology and come up with solutions, that mean they're delivering things that BTC will never be able to. And it's that same technology that's now allowing gold to really shine. We're actually now seeing via blockchain technology gold reaching its full capability. And I propose that in reality, the best version of gold is the hybrid version. Gold through its intrinsic value, through its actual use, its acceptance globally, combining that with as decentralized system as possibly you can for a physical product. Connecting that with blockchain technology not just makes it really usable and tradable on 24-hour transactions, but it also means you can do things like activate DeFi and you can earn interest and returns on your gold and silver, things that really weren't possible previously. Rather than just incurring storage and insurance costs, you can now actually earn a return on your precious metals. And this is one of the great reasons why gold is so much better poised to be a currency. It is so much better poised to be used every day by the world. And it is really that 2,000 years of history, that 2,000 years of use, that 2,000 years of understanding that means gold can actually take place as the next global currency. So look, in reality, I would suggest they both have a place in the future, slightly different. Some would say gold's better, mainly me, but they both do have different use cases. And with that incredible volatility that BTC has, does come incredible opportunity. But in reality, it's not the right investment for everyone, and not necessarily something I would recommend you do just one or the other. I think a combination is often a great method if you're looking to invest in the future.
Excellent, Michael. Thank you. It's a wonderful point to start with, the concept of gold as being universally accepted everywhere. Maybe not be the case with BTC yet, but it certainly is an advantage. Henrik, very interested to hear what you say, but just before that, if there are any latecomers, please feel free to ask questions in the chat function down below. We've got around about 10 minutes at the end for questions for both Henrik and Michael. Henrik, take it away.
Yeah, fantastic. Good to debate with you, Michael. And thank you, team, for moderating. I thought you would be a bit harsher on Bitcoin, Michael. You were quite nice to us Bitcoiners out there, but I'll have a go at gold. But maybe before I start, I'll just say that I do have both gold and Bitcoin in my portfolio. I like both. I think we all can agree that gold is a far better system than the fiat system we have today, where central banks can just print money out of thin air, or the commercial banks. And what you guys are doing at Meld Gold, I think, is incredible. I'm impressed what you have built. Having gold on the rails of blockchain, I think, is a really interesting thing. It combines the portability, I think, of blockchain and crypto, and the programmability with that of gold. So I think that's super interesting. And I had roughly equal portions of gold and Bitcoin in my portfolio, and I think that makes sense for a lot of investors. No, my Bitcoin holding is much larger for some magical reason. I haven't touched either. Before I address your points, Michael, I'll make some points of my own between kind of how I look at Bitcoin and gold. And I think at the end of the day, it comes down to the properties. So what makes both Bitcoin and gold valuable are the properties. And there are a lot of properties we can compare between Bitcoin and gold, but I'll just focus on 3 of them today. And the first one might come as a surprise, but I'll look at the almost unlimited supply of gold versus the limited supply of Bitcoin. So when it comes to gold, maybe not unlimited supply, but pretty close to it. Between Mars and Jupiter, we have the asteroid belt. There's one single asteroid called Psyche that has $700 quintillion worth of gold in it. That's 700 with 18 zeros after it. So $700 billion worth of gold. I read an article that said that if that gold was brought back to Earth, everyone on Earth would be worth $92 billion. Of course, that's just pure nonsense, right? Because what would happen is that the price of gold would collapse, right? It would go back to close to zero, where it all started, and become worthless. So only things that are scarce and have utility have value. So gold is not very scarce; it's almost unlimited supply of gold out there. And will we have space mining in the next 10 years? Probably not. All right. Will it be 1,000 years? I don't think so. I think it will probably be hundreds of years. I think that's very reasonable. And that means that the market will start pricing in that long before that happens. So maybe in the next decades ahead, the market will start pricing in that all that gold that exists in our own solar system. As you mentioned, Michael, gold has a 2,000-year history, and they might only have hundreds of years left as a store of value, as a scarce asset. So it's coming to an end fairly quickly. Currently, some of the smartest minds in the world are making sure that humans are becoming a spacefaring species, and I really doubt that we will find more Bitcoin out there, at least not in our solar system. So the supply of Bitcoin is known and is fixed at 21 million. So I think that's a fundamental reason why something digital that we can control, or that no one can control, might have lasting value. Second point is around security. So there is a great writer, a polymath called Nick Szabo, the inventor of BitGold, which is the precursor of Bitcoin. It's written about security in the form of shallow security, better security, and deep security. And shallow security is digital, centralized security. We have seen that very recently in terms of GameStop. I think we all saw what happened there. The traders were unable to take positions in GameStop because there were centralized entities that were controlling the trading of shares. That's unsafe, it's unsecure. That's shallow security, and I think we all can agree that's a bad system. With gold, we have something better. We have better security. It's a physical good, right? So things like real estate and gold is fairly secure. You can take ownership of a physical good. You can defend them using guns. The Jews fleeing the Nazi Germany used security of physical gold to hide gold in their clothes, and they were able to keep some of their wealth because of that physical security. So that's good. But I would argue most of the gold out there either exists as shallow security in paper gold, in ETFs and other things, or it exists in custody that you don't control yourself. And I think we've seen that playing out the last few years as well, with countries not able to reclaim their gold that might be stored somewhere else. I think Venezuela has been in a court battle with Bank of England recently to try to reclaim that gold back. So that's still not the best security available. Deep security, with computer science, we have unprecedented deep security. So what's meant by that is meant that with cryptography, you can secure digital property in the form of Bitcoin. And cryptography is a very unique technology that makes it harder to attack than to defend. So most technologies, with most technologies, it's easier to attack than to defend. Cryptography is very different, right? It's much easier to secure than to attack. With Bitcoin, for example, there is something called a brain wallet. So I can remember a passphrase in my head that secures my Bitcoin. There are no accounts or a physical good that I need to protect. I just have to remember a passphrase. And the technology to hack a brain doesn't exist. So that's deep security. And I think when it comes to security, we can also talk about the problem with fake gold and the forgery that can happen. So if I have a gold bar in front of me, how do I know that's actually gold, right? So you need actually quite expensive equipment to be able to tell that that's gold and not filled with lead or something else. With Bitcoin, it's simple. I can just run a simple piece of software to make sure it's true Bitcoin. My last point before I wrap up is that I think Bitcoin is more pure than gold. So the first law of thermodynamics says that energy cannot be created or destroyed. It can only be transformed from one form of energy to another. With Bitcoin, we can transform electricity into Bitcoin. That's very pure. With gold, we have to use energy to dig up dirt, basically, to directly destroy the surface of the earth, to uncover this shiny metal from within the earth. Today, there are many low-grade ores that are containing less than 1 ppm gold metal, so 1 parts per million, which means that you have to dig up enormous amount of earth to dissolve that into gold, and use things like sodium cyanide to dissolve that into gold, which is a highly poisonous chemical. I think Bitcoin in that sense is more pure. You can use the cleanest energy source available to humans to transform that into Bitcoin. For Bitcoin security, Satoshi needed something that can't be forged or faked, and energy is that thing. Bitcoin's proof of work is a proof that energy has been spent, and you can't fake that. It accumulates over time, and that's why we can trust Bitcoin to be secure. And in a sense, energy is the ultimate currency of the universe, and Bitcoin, I think, is the purest implementation of this idea. So we no longer have to dig up earth to uncover gold. We can turn pure energy into digital gold. And I think that's a beautiful thing. So maybe I'll leave it there. And then I'm happy to hear Michael's rebuttal about my comments.
Yeah, Michael, not sure how you're going to get a rebuttal in a couple of minutes to all those, but maybe pick 1 or 2 points, address them, and we've got some great questions coming through, so we'll take them after.
Yeah, so 2 minutes is definitely not enough to talk everything you said there, Henrik. Yeah, on the last one, I think it's a really quick one too to talk about, because by the token that BTC can be created by clean energy, 90+% of energy used to actually mine BTC and issue new BTC is definitely not clean energy. It is coal-based energy. It is not environmentally friendly energy. And by the same token, mining in gold can be done in environmental ways that does not involve toxic chemicals. There are a lot of good eco miners that restore exactly the earth that they've uncovered. You know, so it can go both ways, I think, in that kind of a context. And I certainly appreciate the idea of digging up the earth can be damaging, but it can also be done in a way that does not take the toll on the earth that it used to. The other interesting one I think to talk about, because, you know, the asteroid, I think, is definitely one of the more fascinating topics to talk about. You know, number one, the proof that it actually is solid gold is still, you know, shady to say the least. I think on top of that, I think understanding of the fundamentals of gold, and likewise the fundamentals that, if I can use the word again, BTC plagiarized, was the cost of acquisition and the cost of acquiring is a part of what determines the value behind these products. You know, and likewise, you know, I think understanding what the cost of actually mining gold from an asteroid, you know, I think that's a really interesting concept to learn, let alone transporting. I'm sure they're not going to drag it to the Earth to mine. I'm sure it's going to be mined in space if such an asteroid actually does exist with that much gold. You know, so in that context, you know, I think it's an interesting idea that in many ways gold has the ability to go on and have that additional cost of creation, similar to the way Bitcoin increases in cost of acquisition over time. You know, so from that point of view, I think, you know, there's a lot to be said. And I think if we're talking about the future of gold and how, you know, there is this possibility that it could be acquired from space, you know, the future of technology and what that poses as security issues for Bitcoin is a real concern as well. You know, if you're talking about things like quantum computing and some of the other technologies that are coming that pose real risk to the security behind Bitcoin, especially when Bitcoin has such an issue with actually evolving and adapting, you know, I think there's a real risk there in that same sort of future timeline that's posed to Bitcoin. You know, I think this is why I'm so much for the hybrid version of gold combined with technology offers a right medium for the future, especially in terms of a currency form.
Thanks, Michael. Yeah, I imagine you could speak for another half an hour in terms of the rebuttal, but we do have some fascinating questions. And everyone, I think we might go a little bit over. So if anyone does need to leave at 11:30 Melbourne time, please feel free. But we've got some great questions, so we might go keep going for another 5-10 minutes. This is a great question from Richard O'Flynn. He says, does anyone know the ownership distribution of BTC? What percentage is in the hands of a few, and is there merit in the argument that few with a huge influence on social media are merely talking up their own book? Henrik, can you answer that one? But then equally, I want to ask the same question to Michael about the distribution of gold. Henrik first, please.
Yeah, for sure. So it's a little bit hard to know the distribution of Bitcoin, even though the Bitcoin blockchain is public. You can look at the blockchain, how much Bitcoin is in an address, because people store Bitcoin with centralized custodians on exchanges, etc. So the biggest holders of Bitcoin are typically the biggest exchanges in the world. So it's really hard to know the distribution of Bitcoin. But I think the genesis, the start of Bitcoin was fairly fair. No one had a head start, if you like. The miners started in 2009 and accumulated Bitcoin, and people could start buying Bitcoin and sell Bitcoin. So I think it had a fairly fair start. It's hard to know exactly how it's distributed now. There are certainly Bitcoin billionaires out there in the world that we know about, but other than that, it's fairly hard to know.
And Michael, talk to us about gold distribution.
Yeah, so I know Henrik actually alluded to the idea that a lot of gold is centralized. And look, funnily enough, it's not necessarily quite the case. You know, I think India is a really fantastic example. You know, the actual public population of India represent a huge portion of the global gold supply, and India still remains one of the largest buyers of gold in the world. You know, so gold has had the benefit of 2,000 years of distributed mining and distributed distribution that have meant it is out there in the hands of everyone. And in reality, everyone owns gold jewelry. You know, so in reality, everyone in the world, you know, with some minor exceptions, actually is physical owners of gold. You know, so gold does have that distribution network. You know, and on top of that, gold doesn't get lost. You know, gold does not get lost via being locked away and no longer accessible. You know, gold is always recoverable.
Wonderful segue into my next question, Michael. Thank you for that. Next question is from Mark Spencer. How do we explain 20% of Bitcoin lost forever? Henrik, you talked about the security of Bitcoin. If lost passwords are a big risk and hardware wallets can break. Comments on that one, please, Henrik.
Yeah, that's true. Like Bitcoin has been lost, right? If you lose your private key, you lose Bitcoin forever, and sort of decreases the supply and benefits everyone else. So that's true. Like you have to take care of your security. And if you leave it on centralized exchanges, you don't hold the keys. It's not your Bitcoin. They can be lost. So you have to take care of not losing Bitcoin. I would argue that if you know what you're doing, it's easier to protect Bitcoin than physical gold. Perhaps if you have less knowledge, it's easier to. It's most likely more easy to lose Bitcoin than gold. There is something physical. So there are both sides to the coin, I guess.
Pardon the pun. Peter Nock asks, does anyone have any estimation of how much Bitcoin may be already permanently lost as a percentage of the 21 million available? I might just take that one because we are on the topic. So the estimates I've heard, Peter, 1 to 2 million coins. That's 21 million, of course, will be the number available in the year 2140 when all Bitcoin has been mined. At the moment, there's currently about 18.5. So it is impossible to know, but I've heard estimates of 1 to 2 million coins. Question from James McGinley up north in Brisbane. How does the new supply of BTC each year compare to the new supply of gold each year as a percentage of the existing pool of each? Does the new gold produced need to be reduced by the amount that gets absorbed in real world uses, electronics, jewelry, etc., to provide a like-for-like comparison? So maybe, Henrik, do you want to take the first part, the new supply of BTC versus gold, and then Michael, you can take the second part of that question.
Yeah, I think this is a really interesting one because when the gold price goes up, typically it makes it more profitable to mine for more gold, and that over time will increase the supply of gold. So you have that dynamic going. That's not the case with Bitcoin. So the Bitcoin supply is fixed and is programmed in software how that inflation schedule looks like. So every 4 year that supply is cut in half. Right now is 6.25 Bitcoins that are mined every 10 minutes. And the inflation rate, if you look at that new Bitcoin coming to the market versus the stock outstanding Bitcoin, that's around 1.8%. And I think that's fairly similar level to the inflation rate, if you can call it that, for gold. Correct me if I'm wrong, Michael.
Yeah, so gold really does fluctuate, and that is determined by demand, and in reality, with every mine around the world, and this is why the cost increases over time, which is that natural attribute that BTC plagiarized. I'm going to keep saying that word, so it digs in deep. But as over time it goes and gold becomes in more demand, whether it be via commercial or for investment, the desirability increases and the price increases, and that really does bring more mines on track to actually be viable. So we have a thing called a JORC report, which is essentially how much it's going to cost to extract the gold from the ground. And almost all mines start to activate once they get into that realm of this is actually a profitable way to bring the gold from the earth. There is the other side of the market too, which is the actual recycled gold market, which is becoming bigger and bigger as time goes on. And funnily enough, the fundamentals behind that market are really similar, in that the public generally hear about the gold price, and it's almost that trigger of like that JORC report that, oh wow, my gold's worth this much, I should go and actually cash it in. So we do see that fluctuation of gold going up and down naturally. I guess Bitcoin has the issue where it doesn't move with the market demand, which could be debated as a good or a bad thing, whereas gold does fluctuate accordingly. So I think there's pros and cons to either side of that. But in reality, gold has naturally embedded, forgetting asteroids and what that actually plays as a role, has naturally embedded that ability to scale up and scale down accordingly. On the other note too, just back to that last question, if I could for 2 seconds, the other fundamental issue I think with that loss of Bitcoin, is the ability that high level of security that comes with Bitcoin also means you still, if you want to transact it and you don't want to be on an exchange, you need to still trust the person you're dealing with in order to send the funds. And I think that is a genuine issue that Bitcoin faces as well. That atomic transaction capability is fundamentally harder with Bitcoin than it is with other new technologies coming to market.
Thank you, Michael. We'll take two more questions. This one's for Henrik from Amar up in Sydney. What is Henrik's view of earning yield on BTC and other crypto via BlockFi, etc.? This seems like a major game changer to those that believe on holding and being able to earn/borrow along the way.
Yeah, we have seen a huge expansion of that market last few years. One market that we are looking at is having Bitcoin as an asset on Ethereum. Using Bitcoin on Ethereum and earning a yield on Bitcoin is something we do in one of our funds that we run. So we're quite active in that market, and we have seen a huge rise in the number of Bitcoins that are sitting on top of Ethereum now. In terms of wrapped Bitcoin, REM BTC, that the market have exploded, and billions of dollars are now earning a yield on Ethereum in DeFi. So we definitely think that's another use case for Bitcoin, and it's taking supply away, I guess, from Bitcoin as it's being locked into DeFi protocols.
And a bit of a fun one to finish. We sometimes get this question, what's the forecast for crypto assets? And it's very hard to tell. No one can tell the future. But anonymous attendee asks year-end forecast for both. Michael, would you like to start with your year-end gold price prediction, and then followed by Henrik?
I'm never big on predicting prices, to be honest. I find it's dangerous territory, and I think I would probably take more of a long-term view than I will predict a price. I'm sorry, Mr. Anonymous, but in reality, I think for gold, and I think for both gold and BTC, a hedge against quantitative easing and everything that's coming to the market puts them both in a fantastic position for the future. For me, I think it's that same question as the last, that ability that blockchain now opens gold up to the DeFi space, and that same earning capability, the crypto has the luxury of, puts gold in an even better position, because you're no longer just considering the return on the investment, but you're also now looking at earning yields from those same investments, which I think does change the dynamic. But I think the overall outlook for gold is really strong for the future. I don't think we're going to see the global economy getting stronger. I think we're going to see the global economy continuing to struggle, which positions gold really well for the future.
Yeah, and if I can add something there, I sort of agree with Michael. I think the outlook for both gold and Bitcoin looks very, very good with the macro backdrop we have, with the quantitative easing going around all over the world, here in Australia and elsewhere, right? So that's a really strong backdrop for, I think, for both Bitcoin and gold. Bitcoin, as Michael pointed out, is very volatile, but since we are making the comparison, it's also much smaller than gold. So if Bitcoin were to reach the market cap of gold, if we can call it that, then one Bitcoin would be priced at $500,000 US. So it's only a fraction of that today, about 1/10 of that.
Excellent. Thank you, guys. Well, that was fascinating. Great conversation. Hopefully attendees enjoyed it. Audience, thank you very much for attending. The webinar is being recorded today. It'll be on the Apollo Capital YouTube channel, and I'm sure on Meld Social as well. Henrik, Michael, thank you again for your time. And thanks very much for coming, and enjoy the rest of your day.
Thanks, guys.
Thank you.